Hey, what's up, guys? Happy Wednesday. Yeah, Wednesday. Happy Wednesday for everybody. My name is Ruben from Tenacious Tribe, and here I am. Yeah, once again, episode number 4. Off we go. Let's analyze stuff. Let's go through the charts. And yeah, first and foremost, I hope you guys are having a nice day trading the S&P 500. You're trading your stocks, S&P 500, NASDAQ. Let me see how these beauties are doing today. S&P 0% and NASDAQ 0.9. Okay. Be very careful. Be very careful because I've just written about this on my latest post in my website www.tenacioustribe.com. Yesterday with a lot of people with renewed hopes. They saw the market closing at 2.3% plus. There are already like a lot of questions popping by, as in, is this it? Are we coming to an end? Is the market reversing? How deep is it gonna go? Don't be misguided. I mean, the market flows in swings. Yeah, the only difference between a bear market and a bull market is in a bear market the upswings are lower than the downswings. But if you're in a bear market, then yeah, let me show you in a graphic. Just since we're here. Bull market, upswing, downswing, upswing, downswing, upswing. It just doesn't move like an arrow, like as you guys are. Maybe I don't know. Maybe you guys thought this would be this way because of mem stocks and all that. It's not how it works. It goes to swing highs, swing lows, swing highs, swing lows. Typically in a bear market, you got higher highs, higher lows, and so on. And then eventually, as with every market, as it always been this way, the market structure comes to an end. And, the bulls are not strong anymore, so they stop having strength to make a new higher highs, and end up making like patterns like this, and a new lower high, and then a new lower low, and you got like a market structure broken. And it shows pattern, for instance, and the bear market begins. But the bear market is especially with stocks, it's definitely more abrupt than with the bull markets. The bull market, like, we tend to move up slowly, and then like panic kicks in when the things are going south, and bam, it slams. But still, it typically doesn't go like this. Bum, it's too much. It usually goes as with a higher, longer swing lows, but it does do some swing highs like this also. So that's maybe what we're seeing right now with S&P 500, SPX. Where is it? Yeah, there we go. Oh, these are the remainings of the study I was doing today and yesterday for a post that I've just made. I concluded that the worst case scenario, if you look at statistics and history, that this bear market might as well bottom slightly below the previous low, or the lowest point of the preceding rally. This rally here, this bull market. It's what it has been doing for the previous bull markets. This is not why I'm here. By the way, if you're more curious about what technical analysis and price action has to say about when the market might stop. I mean, we're not no wizards. The study I made just says that as per previous experience, and we know that human emotion is immutable, and what happened in the past tends to repeat itself in the future and whatnot. But we can never know for granted. But a lot of times, in a lot of recessions back in the future, it bottoms slightly below the lowest point of the preceding rally. But just to add up, be careful if you're trading on alongside stocks. Be careful, be extra diligent with risk management, cause yeah, yet again, see how beautiful it reacts to analysis. Support, resistance, support, resistance, support, resistance, and no support here still, but it broke down below support, and now it might be seeming to get up. Watch out if there's some sort of rejection candle in this area, because the S&P 500 obeys just as well as other assets to technical analysis, and it might as well just get back here to then go retrace to the value area, support zone, and do the same thing over and over. Having this said, 5 minutes of introduction for you guys. I'm not here talking about the S&P 500. I'm here talking about another asset. I was going through yesterday's activity, and I came across with this beautiful stock. Not so beautiful. I don't like this sort of formation, but I think this is definitely something that's not comprised within my trading strategy. Although I mean, you can do it anything as long as you got everything quantified and whatnot. I just prefer to trade things that I have 100% or 10. Tending to be 100% quantified, as in 95, 99. I'm very quantified, so to say, and this is not something that is encompassed in my trading strategy. However, I could not avoid looking into it because yesterday, it had some like very interesting stuff going on around with it. First being, look at this amount of volume. What is this? Wow, bravo! How much of this was traded yesterday? I mean, I think today it's also trading up like crazy, like 33% plus. Yesterday it was 60 something, and we had roughly, where's the volume? 725, 924 million. Wow, stocks traded, contracts traded. Wow, contracts changing hands. So of course, this baby triggered my curiosity, especially because yesterday it was the most traded asset among NYSE and NASDAQ stocks. This gargantuan volume was also accompanied with a significant increase in our price, 60% plus. That's a lot. Wow, bravo. So of course I had to look at it, and I found something nice that I can of course relate to you guys, convey to you guys, and try to draw a bearish and bullish scenario for this baby here. Let's see what we got here. So first of all, like gargantuan volume. This is crazy. I mean, there's volume here, but like the sheer size of this candle, of this bar, is like diminishing so much the previous volume. Like, oh my god, it's crazy. Like it went from 50 million to 725 million. What happened here? Who is buying this? Is there any selling pressure on the other end of the bar? Let's see what I see here. That's why I'm here, by the way. Revlon, I have no idea what these guys do. I didn't bother researching. I study price. I study the technicals. I study the charts, and that's why I rely on. Why? Yeah, because these babies, these beauties, they tell the story of something that never changes or very hardly changes. Something that keeps on repeating itself, and something that's very powerful market mover. Perhaps the biggest one. So I prefer to just ignore the noise, ignore investors reports, economics reports, fundamental analysis, macroeconomic analysis. That's not my my thing. Trading wise, of course. Having this said, let's see what he got here. First and foremost, let's draw some trend lines here. This is the first one. Boom. Is it valid? Yes. What did you learn yesterday? We learned that there are at least 3 points touching our trend line. 1, 2, 3, 4, 5-ish. But okay, that's good enough. What else can we see? We see rejection candle, rejection candle, rejection candle, and the other way around, like this previous support, which now working as a resistance. I think it's fair to deem this area as resistance now as the price is trading. What else? We see, of course, a lot of buyers popping up here. Perhaps the same person here. I mean, but of course, you just cannot like buy every share or dump every millionaire every shares of the stock, because otherwise the candle the bullish candle will be bomb like this, and their average price would like suck. It will not be a it will not be yeah, the odds are it will not be economically feasible or attractive to them, because if they kept on buying here, that's what institutions do, by the way. They accumulate. They cannot just arrive here and dump a billion in 500 million, because those are the quantities and the amounts these institutions trade. And but if he does it with a stock with a low share float, low price, what happens to the price? Boom! It goes from 4 to 40, and all of a sudden their average position is something like 30. And if their average position is something like 30, they're gonna be through a hard time in order to recover their initial investment. Having this said, what they do is they buy, they buy, they buy, they buy. If they're accumulating, we never know. They make their fundamental economical judgments and analysis, and that's basis on what they think the world or the company is producing and all that, and that's how they make their buy and sell decisions. Here we see that they bought here a lot, so we could have already, by the way, drawn this as a possible or likely demand area, because at this area we know there's someone with deep pockets ranges in the stock. Price went back to previous support, now resistance. Boom! It touched previous support, new resistance price. Got back into the demand area, and here we see again the same. I don't know if it's the same. Maybe someone who saw that there was interest at this level and was trying to mimic it. But like judging by this amount of buying, uh, perhaps the same institution or institutions that did it like back in November 2020. What else? We see that these weeks don't touch properly the trend line. We can even draw a separate trend line here. Valid 1, 2, 3, 4, 5, 6, and what is this telling me already? We've got a bump and run pattern here, forming, not yet formed. Bump and run. This pattern is usually very good at foreshadowing a possible reversal, but we don't know, so we just wait for the market to give us proof of it. What else? Something that I noticed also is not one of those obvious scenarios, but we got a new lower low here, price wise. So the price made new low here, lower high, lower low. But when you see the RSI chart, you see something different. You see that diverging from what happened with price, the RSI is now making new lower lows. So we see that even, I mean, if we measure these 3141, 3190, it's even like numerically bigger than this lower here. So this tells me also that the bears are losing momentum, and there are nice odds of a reversal with these two, the bump and run pattern and this RSI divergence. So if you're looking into trading this stock long, I prefer not to do it yet. Of course, I like to see proof from the market, and I prefer not to trade against the trend. The trend is still bearish, no matter what sort of preliminary bearish signs we see. So if I were to trade this trend long, I probably do this either here or either when it broke out from here and made new higher highs, and, with the market structure changed. It's possible that this doesn't happen so quickly because before changing into a bullish structure, there are good odds that the price goes instead sideways, ranging for some time, for some years maybe, and only then just breaking out where we buy it. I mean, like if possibly if you zoom into the lower time frames, oh, here we go. Today, yes, see this rejection candle. It's already rejected trend line withdrawn. Sorry. So it's sort of confirming the validity of our trend line. They're bears here also. But yeah, as you're seeing, perhaps if you trend a little bit faster in the faster time frames, maybe there's a good bullish opportunity here. If you see the breakout from this trend line, say something like this, stop loss below this area, you quantify it, 1 ADR, 10 cents, whatever suits you best. Just remember to give buffer to your enough buffer to your trade without jeopardizing your risk reward ratio. In which case, I think we would here. As 1.0 risk reward ratio, I think it's too few. Risking $1 to get $1. For always like 1.5, 2 minimum, something like this. But okay, this is a bullish scenario here. Is there also a bearish scenario? Bump and run still there. Of course, there's a bearish scenario. I wouldn't trade it because I've been seeing a lot of reversal signs. I wouldn't go exactly now wrong also because I see a lot of obstacles in between. Between the price and getting back to an uptrend, which is what I prefer trading. I'm a trend follower. But on the bear side, what I would trade if I had it like 200% quantified, although it's accepted that these sort of setups have positive expectancy. This is what's supposed to happen with the price. If you see that charts long enough, if I see like a bearish sign here where there's demand zone, where the supply zone intersects with the trend line, maybe that's a better opportunity for us to take. Our target being here, our stop loss above resistance, or something else. Assuming that we got a descending triangle here, something like this. Descending triangle, bum, and then there's a breakout here. There's also something nice to trade. And then all of a sudden, the guys who bought here are like bananas. So they see red, they're getting crazy. So they might feel like selling also and giving into the pain of seeing humongous amount of losses. These guys have deep pockets if they're able to all this trading volume here and buy all this volume here once again. Trade this amount of contracts, so to say. And having this said, this is all I got for you guys today. I hope you guys enjoyed. Be careful trading this stock. It's on the upside, it's not the right timing yet. On the low side, the setup is not there, and you see a lot of reversal signs here. Wait a couple more years, so to say, because I trade in the monthly time frame. Awesome to have you guys here, and enjoy. Be careful, manage your risk, happy trading, and just have fun. Ciao, guys. Hope you enjoyed it. Comment, like, share, and all that. And take care. Cheers. Cool, man.